Hi, guys. Dimitri will be with you shortly.
What's
Just
up, guys?
waiting.
We're gonna start.
Okay, Dimitri, it's 8:03.
Yeah, we're gonna start in 1 minute. I just want to wait for a little bit more people to get on. Okay, so give me 1 minute and we'll start. All right, guys. So we're gonna start. We are going to start. All right. How many people got a chance to use yesterday's lesson today? That's one. Press one. One, if you got to use yesterday's lesson today. Or two, if you have not. Two, if you're kind of just testing the waters and waiting to see how things go. Okay, so we have two. Tahir is two. Candace Brown one. Candace, what's up? Talk to me. What did you use yesterday? Up to the advanced, Candace. This is the 5DC. We forgot. That's all good. Oops. Let's see who else. Janet Evans. Jeanette Evans? Is that how you say your name? Jeanette? Yeah, Jeanette Evans. Let me unmute you. Jeanette Evans.
Yeah, hi. Yeah, I've been using your double O.
I use the double O. Okay, nice. How did that go?
Yeah, not too bad, except gold's just sort of milling around in the middle.
Yeah, gold is very like the past few days.
Yeah, it's been a bit of a pain. But it's good. I've been using it for a while. I've only been trading gold. I just narrowed right down to gold.
You said you narrowed it down to gold?
Yeah.
Yeah, gold has been pretty this past like week or so. Just because the NFP, the news came out, like it shot up and went down, and it shot up like crazy and went down. So I think it's just recovering from news, and then also yesterday, you can see yesterday was a bank holiday, so for USD, prices is pretty choppy. And then now we have we're on the 12th today, so we see FMOC. Some reports came out. And then there's nothing really here today. There's really no crazy news today. But there is going to be crazy news tomorrow for USD. Consumer price index is coming out. FMOC meeting in minutes. Unemployment. So we should see gold moving pretty crazy. Tahir, you said you took the OO and it worked?
Yes.
No, I'm saying Tahir.
Oh, sorry.
No, it's fine, no worries. Tahir.
Hello?
I'm looking at the OO. I see you
I
took
took the OO.
And it worked out for you.
Yeah, I was long.
You were long on the OO. How many points did you take?
Let me double check right now. I believe at least 50.
Hey, that's what I like to hear. That's what I like to hear.
Oh yeah, that was good.
Very good stuff, my friend. Very good stuff. So guys, I want I mean, you don't have to do this. This is just me personally. But if you want to see more success than what you're currently seeing now, in my personal opinion, I think it's time to up those lot sizes. What do you guys think? Press 1 if you agree, 2 if you disagree. Because there's certain pairs that we trade, like you're not trading like NZD CAD, for example. Like we're trading pairs like gold, we're trading pairs like US 30, NAS 100. So even if you're doing a small lot size should be netting you like $600, $700 a day. You know what I mean? On a small lot size, even maybe 200 a day. You know, I think everyone bare minimum, which I know not everybody can, but not everybody will, is at least making $200 a day, at least $200 to $300 a day consistently off of 12 and other price action tips, things like that. All right. So I'm gonna go over gold really quickly. Let's check if there's any fundamentals that have taken place today. Damn, this screen is bright as hell. Okay. Good. U.S. shares slipped on Tuesday in a choppy trade as investors waited for business to report on how pricing have hit their earnings, their latest earnings. While bond yields spiked and the dollar shone on the bets that monetary policy will soon be tightened, okay? Indeed, 2 U.S. federal policymakers said on Tuesday that the central bank has kept pace with a planned move to reduce its bond buying program, cementing expectations that the Fed will start withdrawing its crisis-era stimulus as soon as next month. So soaring oil prices are also considered black gold, the version of black gold. Soaring oil prices largely held to recent gains, while U.S. stocks indices vacillated. How do you say that? Vacillated, sorry, I was a little dyslexic for a moment. Vacillated repeatedly between modest gains and losses before a flurry on the third quarter bank earnings report from Wall Street on Wednesday and Thursday. So when we see that stocks go up, gold goes down. And when stocks go down, gold goes up. After watching oil prices steadily gallop higher in the past 18 months, many investors now worry that rising prices are exacerbating supply bottlenecks, weighing on business and crimping economic growth, okay? So when economic growth is stopped, then we also see a rise in gold. So we may see gold rise if this continues, okay? So coal prices are at record peak, and while gas prices are off recent highs, they remain 4 times higher in Europe than at the start of the year. The impact of supply crunches in power and manufacturing components is showing up in data. Figures on Tuesday showed Japanese wholesale inflation hit a 13-year high last month. British shoppers slashed spending. China recorded a 20% drop in car sales, and bottlenecks dragged German economic sentiment down for the 5th month. We are in a sort of holding pattern until we see results, said Peter Kenny, founder of Kenny's Commentary LLC. So also what you want to do is when you see that these people said something, you want to look up, who are they? Like, why should I believe what you say? I don't even know who you are, right? So I'm going to go and check, who is this Kenny guy? Okay, well, he's got a LinkedIn, right? We see gold markets, Kenny. I'm sure this is just his own LLC. But I want to see who he is. Okay, Peter C. Kenny. Okay, so this is the company that he owns. Financial institution and broadcast media with real life, all right? So this is what he does. It's good because a lot of times we will read articles, and I'm gonna go and check who he is for myself and see more information about him. But a lot of us read articles and we see this one was quoted and that one was quoted, but we never look up who are they? Like, okay, well, this person said this, so what? All right, like it could be Joe Schmo that said it across the street. We want to look and see, is the person credible, right? So, okay, well, Peter Kenny said this and he's the founder of this. Okay, great. I'm going to go look at his company and see what he does. And why should I also, because if his name pops up more, then I can start seeing, okay, you know what, he's a credible dude. So that's also definitely what you want to look at. You want to also look up things. If you don't understand what they mean, look them up, whether it's words or people, make sure that you're looking up, because it's easy to read something, but to understand it and digest it and go apply it in the market is a totally different thing, right? We're in sort of a holding pattern, blah, blah, blah. Okay, we are seeing some downgrades on U.S. growth, and impact on businesses will be a thing to watch. So when, like I said, when there's an economic crisis, or there is a stop on U.S. growth, then we're going to see gold rise, okay? Because gold acts fundamentally, right? It's a fundamental pair, so it's going to react to U.S. dollar, it's going to react to all these different things, okay? Let's see. The International Monetary Fund warned on Tuesday that the global economy's recovery from COVID pandemic is being constrained and cut growth outlooks for the United States and other major industrial powers. Okay, industrial powers like energy, oil, all of these things, they're going to be cut because of what's happening with the pandemic, right? Rising expectations that accelerating inflation will prompt central banks such as the Fed to rein in ultra loose policies. Benchmark yields rose in anticipation of tighter monetary policy conditions. Okay, the 2-year Treasury yields, okay, and there's a 10-year Treasury yield too, which also affects gold, okay, which have climbed as much as 100 basis points in October. Wow. And keeping with concerns that soaring prices could crimp economic activity and prompt central banks to raise interest rates on the road. The yield curve flattened and benchmark 10-year retreated to 1.5751%. Okay, so this is good info, right? You don't have to go through the whole line, but it says all those concerns alongside rising treasury yields supported demand for the dollar. Okay, so that would make dollar go up and then gold go down. So that's why we see kind of gold is in a very erratic kind of you see gold is in a very kind of consolidation mode. And the reason why it's in consolidation is because not only because MFP and all this other news, but there's a lot of indecision that is surrounding like the US economy, right? People don't know whether to buy or sell. People are looking at different things such as the 10-year Treasury. People are looking at the rate of interest rates. So that leaves, when a market is moving sideways, that leaves it in a state of indecision. So that is probably one of the reasons why we're in a state of indecision, because there is a lot of indecision that is happening in the articles that we read and the way that people think and feel. Okay, so can we learn to up the lot size? Yeah, we can definitely learn to up the lot size. Yeah, and I'll talk about that in a second. Well, okay. Now, today I want to talk about time sequence. Okay, time sequence is really important to me. The reason why time sequence is so important to me is because I personally used this strategy when I was first, in 2016, when I was first discovering new things about gold. I had traded oil prior to that. I had traded FX prior to that. With gold, I noticed a certain type of movement happen at this certain time. And I wanted to know everything about gold. I wanted to know when it moved, how it moved, why it moved, what time it moved, what time had the most volatility, all of these different things I wanted to know. So when you want to know a lot of questions, right, you're going to get a lot of answers, okay? So one of the things that I discovered, okay, one of the things that I discovered is that price moves at a certain time. The volatility of price moves very high at a certain time within the market. And so there's 3 times, okay? There's 00, there's 17, there's 12, there's 12, there's 23 o'clock, there's 22 o'clock, and I believe that's it, right? There's 15 o'clock, okay. So these are the times, okay? These are the times, okay? And the reason why I put these times here is because, like a photographer, right? Like Peter Parker, if you guys obviously know Peter Parker is Spider-Man, right? What is Peter Parker's day job? Does anybody know here? Nice. Very good job, compliance. Yes, he is a photographer. And a photographer's job is to what? Capture pictures, capture moments. That's what Peter Parker does, right? He goes out into the city and he captures action that's happening. We do that same thing here, right? So we find these time frames within the market, which makes it so much more easier, and it makes you more self-sufficient as a trader, because most traders who get on the chart, they're constantly looking for something, right? They're constantly looking for something. What if you never had to look for something? What if you always could, that something looks for you, that something comes to you, you don't have to go to it, right? It would be so much more easier to trade in the market, because you're not looking for a setup. You're not looking for support and resistance and all these different other technicalities that come into trading, right? In order to make a decision, right? So what this does, what these time frames do, is they give you the confidence to know that something is going to happen at a certain time within the market. Now, the time frames capture volatility the same way Peter Parker captures action in the city, right? And knowing when these times are happening is equivalent to somebody telling you, hey, there's a Burger King or McDonald's down the block, and they are giving out $100 every day at 5 p.m., right? And there is an 8 out of 10 times that you go to the McDonald's, you get the $100. Wouldn't you go there? Even if you were already rich, you would still go there, right? It doesn't matter how much money you'd have. You'd still be there lined up. Rich people would still be there lined up, because guess what? It's free money, right? And that's money that can go back into your pocket, go back into money for investing, right? And so the same way that you would definitely go to a McDonald's that was giving out $100 every single day, even though you knew there was an 8 in 10 chance of getting that $100 every time, you'd still go, because you'd be making $100 8 out of 10 times. It's the same thing that's equivalent to these time frames. Each and every single one of these time frames have a certain movement that the market moves. So what I did was, when I first started trading these pairs, right? When I first started trading gold, I looked at what time does gold move the most? And I found these were all the times. And not only that, after I said, what time does it move the most and how many points does it move? I asked myself, what does it do? Does it go up for a buy? Is it more likely to be a sell? All of these things. Okay? As a trader, you're not just a trader, right? You're a data scientist. A data scientist's job is to collect data, right? To come up with a conclusion for X, Y, Z. You only can come up with a conclusion, or you only can come up with an assumption of things if you gather data. And the more data you have, the more confidence you can have to take a trade, right? That's what builds confidence, is reassurance, is data, right? You go to the gym, you see yourself working out, you see yourself developing muscles, you see yourself, your body getting better. It's gonna give you the confidence to keep going. It's gonna give you the confidence to keep doing it. That's why I trade these pairs, right? But I need to give you the confidence to know why I'm trading them, and I'm not just, bullshitting you or giving you a random strategy like, oh, this is that, right? So you need to know why they work, okay? Now, the reason why they work is because these 00 is the beginning of the day and the end of the day, and 17 is a reversal, right? Lunch break. 12 a.m. is opening of London. 23 and 22 o'clock are previous before 00, so that means that they consolidate during this time, and 15 o'clock is for US 30, okay? Now, let's start, okay? Let's see, 12 o'clock, okay? So we're gonna start on the first time frame, 12. This is what the market did today, okay? There's different ways to trade the 12. Okay, let me this here. There's different ways to trade it. One style that I use is called pending orders. Pending orders, how many people know what pending orders are? Press 1. Yes, and this is all UTC time, by the way. UTC, United Central Time. Press 1 if you know what pending orders are. Drop a 1, drop a 1. Adrian, Brittany, every single one of you. Edith, Lily, I'm sorry. Perfect. That's all I can see. Okay. So 11 o'clock, right? So what I'm gonna do is I'm gonna put a pending order, which is gonna be a buy stop 25 points above and 25 points below this 11 o'clock candle. Okay. The reason why I do this, and I know I'm explaining a reason why I do a lot of things, but you're gonna be using the exact same strategy. So you need to know the reason why something is happening. I can't just tell you, oh, it's happening because the stars are in alignment. No, it's happening because X, Y, Z. Okay. So you're gonna be like a robot. You're gonna retain this information and you're going to robotically repeat it, right? You're going to do that. That's why robots are so good at trading. That's why banks use them over people, is because they follow rules and they follow the system. So that's what you're essentially doing here. Now 25 pips above. 25 points above, okay? You don't use the last number, you take it out, it's just 25. So 25. So this is the buy stop. This is how easy this strategy is. Buy stop, and we're gonna risk a standard lot because big boy lots, right? We need up that lot size. So 25 points to the T. You wanna zoom in too when you do this. It's like art. You're an artist right now. You wanna zoom in. It's 11 o'clock. Boom, right here at the tippy top, right? Boom, buy stop, okay? That's your buy stop. Your take profit is gonna be 25 points. Okay, your take profit never hit. Okay, so your 25 points is gonna be here. Okay. This is your buy stop. Your sell stop is gonna be below. 25 points. That means once the market gets to this level, it's gonna hit and it's gonna activate your sell stop. You get 25 points. You can probably get 25 points. 25. Okay, perfect. Watch this. 11 o'clock. This is how your setup is supposed to look. Prior to any of this happening, you have your buy stop here, and you have your sell stop here.
And guys, if you have any questions, just unmute your mic and ask.
Okay. And we have a take. I'm trying to give it as visual to you as possible. Take profit.
Do you use a stop loss or a mental stop loss?
I'm gonna tell you that in 1 second. Let me just finish this.
All right, sorry.
Right, boom. So here's a trade. Price is either gonna hit here, and hit here, or hit here and hit here. Okay, so let's go. Boom, take profit hit. Order done. See how simple that was? Order done. Price came back up, it hit this level, and it came back down. Now, let's say you left both orders open. Usually I like to close one order. I only leave both orders open if there's NFP, because it makes logical sense. Psychologically, I'd rather leave an order open during NFP or FMOC because major volatility is happening at that time, right? Like high impact news creates larger volatility, larger whipsaws. So statistically, it would make more sense if I left both orders open, the price to hit both sides. Now, granted, that didn't really happen today. That's why I closed one order, which was the sell, because that's the first thing that hit. And I closed out the buy order and then left in the sell. And so 25 points, right? So we risk 1.00. That's $10 per pip. $10 per pip. Okay, so how much do you make on this? Somebody put in the chat.
250.
250. Okay. Do 250 times 5. What is that?
1,000.
Okay. Now,
1250.
Now do 250 times 30. How much is that?
$7,500.
7,500. How many people would want to make $7,500 in a month? Or would be okay with making? Would you be okay with making $7,500 every month? Cool with that, right? Awesome. Boom. That's what happens here when doing $1. When doing $10 per pip. Now, once the lot size gets upped, it doesn't have to be anything crazy. You could go up one more lot. $20 a point. How much is that now? $20 times 25. $20 a point. You can tell me. $20 a point is now 5,000. 500.
100 per day.
500 per day. That's pretty good, right? Let me show you again. This is one setup where 12 works. So we're gonna circle the setups, right? That's one. That's one scenario. Okay, this is 00. We'll go over that in a second. This is 12. Okay.
Hey, Dimitri, is that what Tahir, is that did you use the 12 o'clock yesterday?
I did, yes.
Okay, so guys, this is what Tahir used yesterday. For the new people.
Boom. Okay. Now I'm gonna show you an example. Right? 20 points, 11 o'clock. Boom. Right here. Okay. Boom. Right? Now, this 25 pips for this didn't work out, right? It didn't work out for this one. It did for the buy, right? It came up, first it dropped for the sell. So it came for the sell. Your sell order was canceled out. Then for the buy, it came up, but it didn't go 25 pips. It went 20 pips, right? So automatically, right? Once, let's say this is the order and you didn't want to leave in the buy order, this example, 25 pips happened, it came down, it didn't activate, you're losing 25 points, okay? You're losing 25 points. Here's the system. Here's how the system is. I'll show you why it's great. 25 points is your target. 25 points is also your stop loss, okay? But your projection, your potential profit, we'll just put PP, potential profit, could be 50 to 100 points, to 100 pips, right? Your potential profit could be 50 to 100 pips. In this case, the 25 points, you lost on this one, right? So let's just say you took an L for 25, right? Right here, you took that L, 25. That's excellent. Okay? Now we're gonna go into the next. Okay. So this is the next trade. This is the next trade. Okay. Now your next trade is 11 o'clock. 25 points above, 25 points below. This is a news trade. I'm gonna tell you one thing. Personally, I would have never took a buy stop on this The reason why I would have never took a buy stop on this 12 in the first place is because the resistance level, price is too close for the resistance level. So if I'm doing a buy stop here anyway, price would have hit this and I would have never got a chance to get the 25 points. So you never want to buy into a resistance level. Hold up, my fault, let me just get that out real quick. You never want to buy into a resistance level. Mouse is still whack. Give me 1 second, guys. Actually, no, do that. What am I doing? I gotta go get my other. I gotta go like charge this mouse. Let me just go this real quick. So you never want to buy into resistance level, right? You never want to buy into this level right here because this level right here is too close. So why would you get a buy stop, which is going to be here, 25 pips above? Why would you get a buy stop and then buy into this level that's only 25? That's only 20 pips. Remember, we're targeting 25 pips. Okay, this is what? Let me see, 11 o'clock. Oh, so right here. Okay. Boom. Price comes out. This one. Yeah, it only moved 22 pips. Okay. Right here is a resistance level for 22 pips. We're targeting 25 pips. Okay. But it's too close for comfort. You never want to enter on a buy stop that's just too close for comfort, okay? All right? Now here's a little bit better because this projection is a little bit higher. So we can see 11 o'clock, okay? What, 25 pips. This is 25 pips here. However, instead of me entering on this exact buy stop, I could be like, okay, you know what? There's a little resistance here. I could enter above here and I can take profit right here, okay? And if anything moves past this profit, I could scale up. I could go and scale in higher, okay? So boom, my entry is here, right? Your entry is, let's just say the yellow line. Yellow line is your, I'm sorry. This is your entry point. You're entering here. You're taking profit here, and then if profit breaks past here, you're taking another buy. So boom. 25 points, hit, done. Trade is done. Look. So this is 11 o'clock.
Can you say something about this strategy?
Yeah, 1 second. Let me just finish explaining this last part real quick, if that's cool. This is 11 o'clock. Okay. Now, remember, 25 pips above. So your order would be 25, would be right here. But because this is very close to resistance, we want to put it above here, okay? That way we could, if we buy, like we're buying above the break, you know what I mean? And then the next trade that we get into, which if it breaks above here, this one right here, we could enter in the next level. So, boom, look at that. Instant, profit hit instantaneously, right? So boom, that's your 25 pips, that's your 32 pips. I'm sorry, you're getting 32 pips, and then you're getting another 53 pips. Okay, you're like at 80 something pips now. Your stop loss is still 25. So the best thing about this strategy is you could make 25 points, or you could lose 25 points, or you could gain 200 points or 80 points, but you're always left at 25 points. So that loss that we took for 25 points here doesn't even matter because we just made 85 points here We lost 25 points here, so we have 60 points. Plus we gained another 25 points, so we're back to 80 again. So see how like when you assess certain risk and you have a certain strategy to where it's set up for you to like have the highest potential but the lowest reward, you can kind of still come out on top. So a lot of people count their losses, and the reason why they count their losses is because they lose big. But I've developed a strategy where you can lose small and still gain big in the long run after taking a few trades. Okay, go ahead, say what you want to say, boss.
Well, yeah, so especially for the new guys out here, well, I've been in the 5DC for like a year, and I can say that this strategy hits like around 90% of the time consistently, Tuesdays, Wednesdays, and Thursdays. That's all.
Thank you. I appreciate that. How's it working out for you?
I mean, it's fine. Yeah, I normally don't treat Mondays, but yeah, it's super bulletproof strategy.
Can I say something as well, Dimitri?
Yeah. Go ahead.
Okay, so I'm Marcus Class. God bless you all. I've been doing 5DC. I've been taking the class for almost a year now, and I can tell you the 12 is absolutely a bulletproof strategy. Now, I have taken time off for trading, just so I can had some issues to work out to even out. So, but anyway, during the time off, I've been looking at the charts and doing psychological trades. Meaning I'll look at the charts and then I'll call like the 12. So I've mainly been focusing on that. And as I've said before, and like the gentleman before me said, it is absolutely a bulletproof strategy. So trust in the 12.
I like that. I like that.
Trust in the 12. Thanks, Marcus.
Absolutely.
Thank you. I appreciate it, man.
Absolutely.
And I'm glad
And
that
Dimitri, can you answer that question about, either said the 12 is best, honestly, about the stop loss when someone asks, do you have a stop loss?
I just said that. I answered that already.
Oh, okay.
Yeah. 25 points is your stop. And that's just honestly like you could literally think about it. You can literally take 3 losses, 25, 45, 55. You could lose 55 pips. You could come in on the next trade of the 12 and gain 120 points from just one trade. You know what I mean? So it's like a lot of people count their losses, and their losses are heavy, their drawdowns heavy. But if you go to that McDonald's and they're giving out $100 every day, and you know 8 times out of 10, hey, you know what? I walk back home, but I'm walking back with 100. And if I don't walk back with 100 the next day, I'll walk back 100 the day after. You got to think about it in terms of that. Like, so many of you count your losses that you don't even realize the wins that you're having, right? And that's why you lose, because you focus on losing. If you focus on losing, you're just going to lose more, because you can't there's no process of moving on, right? It's like being stuck in the past. So rich people don't live in the past. Rich people don't live in the present. They live in the future. They do what is now in the present to even live more in the future, okay? So just remember that. Now, and this is just the 12. This is just one strategy, okay? And this is just on gold. I haven't even gone to US 30, all right? Now I'm gonna show you here. Okay, 11 o'clock. Let's go back test. But we could see, right? Buy stop, this 11 o'clock. It never even hit for the buy stop, which is great. It hit for the sell stop, boom, and then 25 pips. Watch this. 25 pips. 43 pips. Okay? Now, if I'm doing the 12, okay, and I drop 20 lot. 20 lot, a little bit of shit, you guys. Let me do 5. I drop a 5 lot, and I catch 25 pips. How much am I making?
$5,000.
5 grand. 5 grand. Okay. I caught what? 80 pips? 50 times 80. $50 times 80. 4,000. No, that's no more less, more than 4,000. Let me go grab a calculator. Oh, 50 times 8 is 4,000. Okay, right. So 4,000. So 4,000 here. Just adding it up. Let me just make sure. Okay, I got it. So 4,000. Okay, and then 50 on the $50 a pip times 25. 1,200, 1,250. So 1,250 plus 4,000. That's 5,250. 5,250 plus another times what? Okay, 5,250. Let's just say 1,250. That's 6,250. 6,250. So on 1, 2, 3 trades, $6,250 in 3 days. Now you lost 25 points, right? So let's do E take away. Okay. Times 25. 1,250, right? So you lost 1,250. So your thing would have been 1,250, right? So you would have lost 1,250, but you still would have gained $5,000. You still would have been up 6,120.50. You would still would have been up 5,800, something on that, 5,500. Okay. And 3 trades, and that's just from losing one. Okay. Now here's one. We're gonna go to one more. Look at this one. Another one. Boom. Another one. 25 points. That's another what? 1,250. Okay. So let's say 5,500. That's 1,250. That's 6,750. Then you have what? Let's see, 11 a pop. This here, lines here, right? And you have boom, right? So your buy stop would have happened here, right? Say you're 25 pips, right? It didn't hit on this one, and that's cool. Look, okay, this is 11. I'm sorry, yeah. This one. Okay, boom. All right, you're 25 pips there. Okay. Okay. 38 pips. So your 25 pips you would have lost here from the upside, right? Because then you would have saw this buyer's candlestick got pulled back, and you would have made 38 pips here. So you just would have gained back whatever you lost if you left in this order, right? So this worked out for the sell side, and worked out for the buy side. Worked out for the sell side. Let me like reverse with this mouse. Never get a wireless mouse. Wait a second, guys. Lions.
Yes,
Can you do me a favor?
sure.
Can you just mute my mic real quick? I'm just gonna get this charger for my mouse. I apologize.
I don't, let me just see if I can do that. Hold on.
Sorry, guys. Yeah, so my computer just, my mouse is running a little bit low on battery. So I have to kind of like stop and charge it every like second, which kind of sucks. So I do apologize for that. So that's just one way that you can take the 12. And the 12 has been working for honestly years. Like I could go back to any time period. I could go back to 1 year. I could go back to any time period on the chart that you want me to go back to. Okay. Ooh, this is what, 2021. Okay. 2021. Ooh, this is look, all last year. I'll even show you last year. This is 10, 11, look at that, 12. Look at the volatility that happened. Okay? And this 12, this is how you know like a 12 can set, like you can set up a 12 nice. So that's one way that I showed you, right? Buy stop, sell stop. Super simple. 25, 25, 25. Super simple, right? Now check this out. Okay? Horizontal. Okay? 1, 2, okay? Look, this is the highest point. This is the second highest point because this is where the wick is at. And you want to zoom in, right? 1, 2, 3, 4. Okay. Now, 1, 2, 3, 4. Okay, because I'm putting the candlesticks on where there was wicks. These wicks, these big long tails that you see, that's where the candles are going on. So 1, 2, 3, 4. Okay. Now, finding where price is vulnerable. Okay. I don't even want to do this, but whatever. I would have already entered, I'll be honest with you. I would have already entered out of this. Okay. See, right here, trend line. Boom. This would already, boom, I'd already be in this trade. As soon as price crossed this here, this little bow tie like this, I would have been in here. One reason why I would have been early, a little bit early for the 12, is because I see consolidation. Consolidation is just accumulation orders. That's where price is building up. This was the highest point at 1965. Then the second trade moved to 1963. Then the third price point on the hourly moved to 1960, okay? Then we got 1960.55, so around this area, we'll just do 1965 right here. So it moves here, and price never came back up here, it never came back up here. It started to move down. So my target is below this level. Once price moves past this level, it allows me to know that the market has broken the strong support that was holding. There was strong support. Look how strong the support was. Price was holding for 1, 2, 3, 4, 5 hours, 6 hours, 7 hours, 8, 9, 10. So in 10 hours, if price wasn't broken, guys, so boom, you see price broke 163, okay, 163 from here to here. You see that price broke, okay? Now I'm gonna start entering right at this level. Why at this level? Because this is where the structure is broken. See, once you break under here, look what's under here. Nothing. It's like it's the floor. The floor is here. So my first entry, bomb, 79 points. It exceeds that entry. Now at 11 o'clock, clearly the buy stop. I'm not going to do a buy stop. It just makes common sense. Price just dropped all these points. How would I do a buy stop? We're gonna wait for price to come all the way back up here? No. So we add in a sell stop. Boom. I'll stop here. Take profit. Take profit. The take profit you could do is like right here. You could probably even get a little lower, like around this area, because this is where price first started as support, right? It broke through and it supported this area, so I'm targeting 1216. So there's no 25 pips. Now this is where you could exceed 25 pips. So my stop loss will be 25 pips, right? My stop loss is 25 points if I get out of here. Sell stop. We're dropping a 5 lot. 5 lot. Boom. 25 points. Boom. So price opened. My stop loss didn't hit. I just made 161 points. Do some math. 50 times 161. $50 times 161 points. $850. All right, you gotta put that extra $50 counts. Okay. $8,000 in one trade. Not to mention the other 4,000 that was just made here. Right? So that's like 14 racks in one trade. Just from one setup. Now imagine you could do a setup like this every day. Okay? And price kept dropping. Look at that. That's ridiculous. Price kept dropping. Okay? Now I'm gonna go back even further. I'm gonna go back a little bit further. Well, you see how that 12 made sense? Right? Like there's different kinds that you could take the 25 points. Look, I could look at a 12 and see it on the chart. This right here is probably a 12. I can guarantee you. I could look at it and just tell. I tell you. Boom. Look at that. You could just smell it. Boom. 11 o'clock. Okay, 25 points. Look at that. Boom. Buy stop didn't even hit. Sell stop. Boom. Look at this. Another 12. Look at that. Boom. Look at that, another one, boom. Like, I don't even need to do the buy stops anymore. Like, look at this, 11 o'clock. Okay, we'll see how this one worked out. This one work? 40, okay. This is 11 o'clock. This is the first one. Okay, now check this out. 14 pips, all right? So I'm losing 25 points, which is fine. But look, 25 points. Okay. 25 points, all right? 11 o'clock. Boom. Hit. Right? Goes back. 25. Boom. So you would have lost 25 on both sides. So you would have lost 50 points in the spectrum of things. You would have lost 50 points if you were getting out. Right? If you got out, you would have lost 50 points total. Even though it did end up working out, right? It did end up working out. Fair game though. Oh, wait, did I write that right? Yes, even though it did end up working out. Okay, so it's actually supposed to be right here. Mark back up. Fair game, so whatever, you lost 50 points here. Okay, that's fine. But 50 points compared to, look at the 12 here. This 12 doesn't have to be 25 points. Why doesn't it have to be 25 points? Because this is 11 o'clock, right? This is the resistance zone. Boom, 25. We know that it's close, so we're not gonna put it here to take profit there. We're gonna put it above the ceiling. The next take profit is gonna be here. Why? Because it's an opening. It's like having an opening basketball shot. Imagine playing basketball and there's no players on the field. 91 points. 91 points. In this one, you could have made easily, and I'm just gonna say here, 78 points. So you got like 130 something, and then you lose 50. Doesn't matter. You still have 80 something. What matters is your overall game. That's what matters. Look at this 12 right here. Boom, Curry with the shot. Okay. 25 points. And then 25 more come. 40 come. Boom, look at that. Double win. 40 on the bottom. 25, we're not gonna do 25 here though, we're gonna do 25 above. And then take profit is here to the next level. Look at that. Boom, 73. You could do 25 too. But the reason why I did it a little bit lower for this opening is because there's a support zone here. There's a resistance zone here. So even if you did 40, and then the next one you want to do 40 here, 80 points, done. Guys, this is just too easy. Look at it, 11. Never hit the buy stop, sell, trail down. Okay. So that's at 12 o'clock. How many people understand how to scale in? Press 1. Who if you don't? Not about taking it the 12 every chance you get. It's about taking the right 12. This strategy has been working for a long time. Last year we had 300 wins, 3 ties, 3 draws, and 2 losses last year. Okay.
And guys, keep in mind, this is not 100% guaranteed. Because
Right.
just because it was like that last year doesn't mean it'd be like that this year, okay?
Right, and it wasn't guaranteed last year. That's why I said we had 353 wins, 3 draws, and 2 losses. 2 losses isn't a guarantee. Okay? Now look at this. 11 o'clock, 12 o'clock. This is 17 reversal. Okay, look at that. 11 o'clock. 12, rise. Look at this. 11 o'clock. Okay, this is 11. This is 2019. Okay. Okay. Your 25 pips. Boom, your 25 pips, you're out of there, right? But check this out. You still have your other order. Okay, now once you see this pull back and you want to see what the other order will do, it's easy to just change over your order position. Let it ride. You lost 25 pips, guess what? You just gained 44 pips and still made the 25 pips. So technically you have 25 pips. So you actually didn't lose anything. That's what's so great about this strategy, is that I found a time where you can capitalize on both sides, no matter how far it moves. If one side doesn't work out, okay, then cool, you got the other side. If both sides don't work out, then cool, you have the next trade. If one is down 25 pips, then cool, you have the next 80, 90, 100 pips. So it makes it very hard for you to lose, right? And that's just on one time frame. That's just on gold. Look, same thing happens on US 30. Let me see. Okay, let me see where we at. 11 o'clock. 25 points. 25 point, look, more than 25 points hit. Done. 25 points, look at that. Both sides. Done. Okay, we don't even need to count it. Okay. 11 o'clock. 25 points above. Done. Like it hit. Instantaneously. Look at that. Look at that. 15, 14, 13, 12. Look at that. 12. Hit. Done. Even on the bottom. Okay. Look at that. It works on US 30 too as well. Okay, look at that. 11 o'clock. Price came up and hit the buy stop. Easy. Okay. $11 o'clock. Price hit the sell stop and hit the buy stop. Both sides. Okay.
Hey, can strategies change like over time?
Anything can change over time, but it's all about adapting to the strategy. However, the strategy that I personally been using, this hasn't changed. Why? Why hasn't it changed? Because U.S. market session opens at 8 a.m. Asian session opens at 8 p.m. Right? Sydney session at 6. Like all these times are constructed that the way they are. So can strategies change over time? Absolutely. However, what's so unique about the strategy is it's at the market time that banks open every single day. Unless banks decide not to open, unless they're like, hey, you know what, we're gonna open 8 p.m. at night. And guess what? If they say that, great. Now I'm trading on that time too. So no one can escape from this. Like it just is what it is. Like
It's absolute. Wouldn't you say?
Yeah, it's absolute. So yeah, they could go ahead and change the time and open up the bank at a different time, but
Or
just trade at that time. Like it doesn't really matter. So I hope that answers your question.
Cool, then on, thank you.
No problem.
Exactly the same 00 hours. And another question is, do you believe or do you recommend more the 11 and 12 hours that is more reliable than the other ones? And the last question is, in US 30, is the same 25 or is higher the buy, sell, stop, and then the TP?
US 30, you can still make it 25. You can do it higher. The reason why it's a little bit more flexible with US 30 is because it's US 30. The volatility of the pips move astronomical, so it's totally fine. I'm gonna touch it.
For US 30, I used to do the 25 entry, and then I would take profit every 10 pips and trail it up about 50 pips. And I was making pretty good money doing that for a while.
Why do you not do that anymore?
I just haven't traded US 30 in a while, honestly.
Oh, okay.
I had stopped, and then I don't know. I actually, you know what happened is I ate up one of my accounts on US 30. Kind of scarred me for a little bit.
Scarred you for a little bit? But it was working, right?
Yeah, I was a little bit afraid of US 30 for a little bit, you know.
But it was working, right?
Oh, yeah, no, it was super working. And the 00 works well on US 30 too.
Right. What I love about these different time frames is that they work everywhere, right? Like Mexican peso, boom. Look at that. Mexican peso, 12, bomb, like no problem. At 11. Okay, look at this one. Yeah. Look at the 00. 002. Like, this is absolutely crazy. Yeah. All right, guys, I'm gonna go over some of the other time frames tomorrow. But I wanted to get everyone a clear, idea of how these time frame works. How many people enjoyed today's lesson? Drop a one. Okay. If you felt you wanted to learn more, or I'm sorry, if you felt like you didn't learn enough, press 2. Okay. Awesome. How many people on here use Instagram? Number 1 if you use Instagram. Awesome. So what I want you guys to do right now, take a picture of your screen and tag the Goldfather _ 5DC. Okay? Hashtag 5DC. Make sure you get the candlesticks.
Adriana, did you have a question? I saw that you raised your hand.
Oh, no, he already answered. Thank you so much. Appreciate it.
No problem.
I have a question regarding the schedule. I see that the Friday we do not have class. It's going to be on Monday. Is that correct?
Correct. So on
Okay.
in the night courses, there's no class on Friday. It's Monday, Tuesday, Wednesday, Thursday, and then Monday.
Okay.
So the last day is Monday, and on the day classes, it's just Monday through Friday.
Okay. And the other question is about after this class, I'm also enrolled on the advanced one, but I don't
Yeah.
have I don't know the schedule yet.
Yes, you do. You have to click on the advance. When you log in, you have to click on the advanced. And
It
when you
doesn't
click,
let me to. I saw, but doesn't let me to. I sent you an email.
yeah, no, I responded, but it's still not allowing me. So Dimitri, you can log off, and I'm going to stay on with Adriana to try to assist her.
Okay, well, I don't know if everyone else is logging on.
Guys, if you're going to the advanced, it's at 9:30. And don't forget to tag Dimitri on Instagram.
Yes, sir.
Adriana, without mentioning, oh, because you're not in the advanced, Adriana. You're only in the 5-day program.
No, I sent the payment to Dimitri for
Oh,
the
okay.
advance. And then he said, okay, I paid for the advance. He said, okay, since you are in the advance, you can do the 5DC. So I started.
Got you.
But since I didn't get the link for the advance,
I
it
got
seems
you.
like
I got you.
the advance
got
already
you.
started. That's what you mean?
It already started. Hold on one
Oh,
second.
so I missed.
You missed
so,
yesterday.
Yes.
So this is what I'm gonna do. I'm gonna
How about you guys handle this and you
Yeah,
sit in
we're
the
gonna
room and let everyone talk.
we're gonna
Okay,
hang up.
okay.
Everyone, please, you can log off. Everyone in the advance will see you. Adriana, I'm gonna send you another link because hold on one
Okay.
second. Let me just make sure everyone gets off. Okay, everybody, you can log off. Brittany, Evelyn, Jorge, Lily.
Hello?
Guys, log off. No, we're just waiting for Chachu. Log off. Evelyn, Jorge, Robert Sanchez, Guillermo Martinez. Please log off. Evelyn, log off, please. Only 3 people logged on. Guillermo, Robert, Sanchez, and Evelyn Lemmy. Please log off. Because what's going to happen is if I remove you, then you won't be able to get on tomorrow because it just removes you completely. So please log off now. You know what? Adriana, I'm gonna log off here. I'm gonna send you a link, for you to log on to. Once you log on, it will just be us in the group, okay? So I'm gonna send you the link in your email. I have your email. I think I responded to you earlier. I have your email. Okay, so look for the email that you emailed me on earlier today. Thank you. Okay, bye.